Who's ready for tariffs this weekend? I'm ready for tariffs this weekend. My name is Blake Morrow, and you are listening to the Week Ahead video. I'm glad you guys are here. Yeah, it's that weekend. It's February 1st. Well, depending on when you're watching this, it's the first weekend of February, and we are expecting to see if we're going to get some swooping tariffs on Canada, on Mexico, on China. Who knows? And who knows if they're coming this weekend or not, but we're going to be ready for some gapping in the markets come Monday. My name is Blake, and like I said, I'm so glad that you're here. And we got so much to talk about. Not only are we going to talk about the tariffs and maybe the implications in the markets, what it could do to currencies, what it could do to equity markets. We also need to talk, well, I'll just talk about it right now. We had the FOMC, and the FOMC really was probably the most boring event of the week this last week because they've kind of got their hands tied. And we had a lot of earnings this week. We had a lot of Mag 7 earnings, and you know, if you haven't seen it, stocks have screamed higher despite the DeepSeek news that had hit NVIDIA early on the week. So there's been so much volatility in this market. It's been nuts, and I'm glad that we get to sit here and talk all about it. So what we're going to do today, we're going to go through the calendar of events. We're going to talk about what's happening this next week, how it's going to move, or how it could move the market this next week. We're going to talk about some of the tariffs and what those implications could be, maybe what some projections might be. We're going to go through all the other different markets like the S&P, what's happening in the bond market. Gold's at all-time highs. Crude oil has slumped back to $73, which you guys already knew about. And I'm going to bring in Nick from Trading Analytix to talk about other markets as well. So, and then at the very end, I'll give you my three, actually today it's going to be four, top trade setups of this week, but I'm also going to review the ones from last week. So much to cover. Let's go ahead and get started. And, we're going to start with actually going into our calendar. Now, remember, you can go right over here in Forex Analytics and go through the calendar, and you can just, select whatever dates you want to cover. But what I'm going to do is I'm going to be just covering some of the individual currencies. Now, remember, in Forex Analytics, we don't just cover currencies. We also cover, equities. We cover crypto. It's not just the currency market. We have 30 different instruments that we follow. But in this case, I'll cover some of the major currencies right here as we're going through the week. Now, as I mentioned to you guys earlier, it is the jobs market week. It is non-farm payroll week. And so that's going to be a pretty important week for the markets, taking in, especially if you take into account what the Fed talked about this week. They're really going to be focusing on inflation, or not only inflation. Well, they think inflation's coming down to target, or is pretty much come down to target, but they're really going to be focused on the labor market. So starting on Monday, we're going to have ISM manufacturing data. Tuesday, we're going to have JOLTS data. So, whenever you're thinking about all of this U.S. data, you're probably going to be focused a lot on the dollar index. Now, I want to show you, let me see if I can grab it really quick, or I'll do it right here. If you look at the dollar index, and I want to share with you the dollar. Let me pull it up for you. Actually, I'm going to pull up the dollar two different ways. So you can see the dollar index right here. This is obviously into the election. You've seen the dollar pull back, and now it's trying to punch out of its small little descending channel. Well, I'm going to take you over to the dollar index right over here, and you can see the dollar. Okay, you can see the dollar right there. Now I'm going to I'll use either one. It doesn't really matter. This is just a CFD from Pepperstone. Right over here is just the dollar index. And I'm going to go to the CFD, and I'm going to go back to Trump's first presidency, his first term. And that means I need to go to the beginning of 2017. So what you'll notice here is we have a very similar pattern, right? Like the dollar index was in a nice channel. You guys see that, right? Then we had a descending channel beginning of January, right? You can see it just like that. Looks something similar to this. You know what date this was? Right here? That is February 2nd. You know what date we are right now? January 31st. So February 2nd happens, or February 1st and 2nd happens over this weekend. So wouldn't it be interesting if we see a continuation in current times from what happened in early Trump presidency and the first presidency, right? So the reason why I bring that up is because what's happening this weekend is very big. And let's talk a little bit about, before we actually get into to what else is happening through the week, I guess what we should be talking about right now is the Trump tariffs and how it could impact. As early as just a couple hours before filming, I'm filming right now on Friday. This is Friday midday as we're wrapping up our week. So you can see that, currencies are moving, the data's moving. That's because the market's still open. Just about an hour or two ago, sources, now it's always the sources said that these tariffs might be pushed back to March 1st. Now, Peter Navarro was on CNBC earlier talking about how you shouldn't trust sources, right? The fact of the matter is, over the weekend, there could still be sweeping tariffs all over Canada, Mexico, and who knows wherever else. But what we've seen is the U.S. dollar Canadian slip as a result. Now, you can see it in real time because this is a daily U.S. dollar index. The dollar index came under pressure because this headline came out. But again, it's just sources. What happens over the weekend, if we get some sweeping tariffs, which is entirely possible, the dollar index could start surging higher towards 109 and maybe even higher than that. Now, what happened in the first Trump presidency is, if you see, going into February, March, I think it was very early March, when he put out I think it was a headline and it was an interview with the Wall Street Journal. He said the dollar is just too strong. And from there, the dollar sold off quite dramatically. And you guys know the Trump administration really favors to have a weak currency. They want a weak dollar to promote trade. But in the meantime, as they're discussing tariffs and trying to implement tariffs, the dollar could strengthen in the very near term before Trump and his administration in current day gets sick of having a strong dollar and wants to try to talk it down. So we could follow a very similar pattern that we did in the first presidency. Remember, history doesn't repeat itself, but sometimes it does rhyme. But right now you can see that the parallels are quite similar. All right, now other things that can move the dollar index and is going to be the jobs report this week. I mean, that's a fact, right? You got like I said, on Monday you have ISM manufacturing. Tuesday you have JOLTS. Tuesday night we're going to have New Zealand employment. So we should keep an eye on the New Zealand dollar. And the reason why I say we should keep an eye on the New Zealand dollar is because we talked about it last week about, a lot of times you look at a long-term chart like this and you say, well, I can buy it here, look for targets up here, stops below here, because this is a major support. But the fact of the matter is, with employment report out of New Zealand on Tuesday night, and also with everything that's happening with the dollar and trade and negotiations, there's a chance that the dollar could actually strengthen, and we could see the New Zealand dollar back at 56 cents. But remember, this is all major support. You guys know, especially those of you that listen to our daily shows, you know that below 55.50 in the New Zealand dollar, there's a lot of open air below that. And I get pretty bearish if we start breaking below these levels. Now, if you don't know how to get to our free shows, all you have to do is go to our website, click over here where it says, webinars. We have our Flow show, which is our European show, hosted by the one and only Ryan Littlestone, and he's with K-Man, joins him every day. That's in European hours while I'm sleeping. But if you live in North America or maybe in Asia and you want to listen to the F.A.C.E show, the F.A.C.E show is free and it's daily, and it's with Dale Pinkert, who's our host, and he does so many great interviews with a lot of the talent that you would see on CNBC or Bloomberg. He sits down with them for 30 minutes at a time and really talks very deep issues with them. Plus, you get analysis from myself, Ryan, K-Man, they catch you up from Europe. Steve Valgeris is there sometimes. Stelios is sometimes. Grego Horvat. Leandro's even popped in there, our Spanish analyst. So make sure you're listening to the F.A.C.E show. That's where you're going to get my updated analysis each and every single day. I'll see you there for sure. All right. But going through what else we've got going on this week, we have ISM services data, ADP data on Wednesday. Thursday is the Bank of England rate decision. Now, we should talk about the BOE, and the reason why we should is because the market is expecting a cut. Now, I'm gonna draw a few things for you here with the sterling. So we're gonna go to the daily chart really quick. And we're going to do a little work here, technical work. And I'm going to delete some of the stuff that you see here. Let's delete that. We're going to delete that. We're going to even delete that. And we're going to draw this descending channel that you'll see just like this. Now, if you want to know exactly what my thoughts are on sterling, here, let's wrap this up here. Let's do this. Okay. If you want to know, what my thoughts here are on sterling, remember, you can always go to Forex Analytics. You can just select sterling. You can go to basic technical. You can go to harmonic patterns. You can see what harmonic patterns are developing, or Elliott wave counts are developing as well. But if you look at sterling, we're in this descending channel. So the market is expecting a cut from the Bank of England, but it's the votes from the Bank of England when they cut, which they should, that could alter expectations moving forward. So the market is already very well aware that the Bank of England will cut on Wednesday. Wait, Wednesday? No, Thursday. Excuse me. But one of the other things that you might not notice, and I'm going to draw it out for you, is we have a bull flag pattern developing. And so with that bull flag pattern developing, we might actually see a move higher. Hold on really quick, guys. All right, guys, sorry about that. I just as I was recording this video, what you'll see is this massive move that we've just seen, and this is a 1-minute chart in the US dollar Canadian. You'll notice right here on Live Squawk, it says White House Press Secretary says Reuters report on tariffs is false. Mexico, Canada, China tariffs to start February 1st. The market has moved aggressively as a result of this. And this is the thing that I was saying just a minute ago as I was filming this video, is that it's a very fluid situation and there's a lot of sources out there. Don't always trust the sources, and boom, that happened. All right, so you guys can obviously see the market is very, very sensitive to everything that's happening right now. All right, that jarred me a little bit, so I almost forgot where I was at as far as what's happening this next week. Anyway, we have the Bank of England. We were talking about the Bank of England situation. Look, we have a bull flag pattern, but we need to break above these highs really to get the bull flag pattern going, which could happen as early as next week, depending on what happens now with trade, tariffs, and the Bank of England as well. All right, Friday, one of the other things that we have going on aside from Canadian and U.S. jobs is we are going to have Mexican inflation. Obviously, the U.S. dollar Mexican peso is very, very much in play right now, just with the headlines that just came out a moment ago. You can see on the 1-minute chart, the dollar Mexican peso is moving all over the place. That's, again, due to the headlines that is happening as I'm filming this video on a Friday. So you guys can very, very much know exactly when this video is being recorded. But we also have Canadian jobs and non-farm payroll jobs. But I'm going to say the Canadian jobs don't really matter as much right now. We have to get past this weekend through the tariffs. So with that being said, with everything that's happening out there right now, I'm going to be covering gold. I'm going to cover crude oil. I'm going to cover what's happening in the bond market and what's happening with yields. I will talk about the S&Ps, but first, I want to bring in Nick from Trading Analytix. He's going to talk about what has happened with the Mag 7 earnings and what's happening with the indices, and he's probably doing the exact same thing I am right now, saying, hold on, folks, things are moving. Anyway, enjoy your time with Nick. I'll be right back.
Hello everybody, my name is Nick Groves with Trading Analytics. Blake, thank you so much for having me on. Let's go ahead and talk a little bit about the equity market. So S&P is coming off a little bit right now. At the time of recording, it is about 1:45 Eastern. We just saw some news that NVIDIA might be addressed by the White House at 2:30, so we'll see what that brings. So seeing a little bit of weakness come off, but overall the market had a pretty decent week. I mean, we did fall after that DeepSeek news, but it came right back up towards all-time highs. Just an hour ago, we were about 1/4% away from hitting all-time highs again. So do I expect us to hit all-time highs? I do. Taking a look at the stat here, you can see when we have at least one all-time high, we typically see another one follow. 97.7% of the time, to be exact. The only time where we had one all-time high and then reversed was in 2022. So, I am kind of expecting that. But let's say we do pull back. I would be looking for the 6K level as really, really key support. I think that's a bit. I think if we take out 6K, that we will probably take out this spike low at 59.22. But in the event that we do end up heading back up towards all-time highs, I am targeting the 6,200 level. You can see it's the 127% extension of this recent move. And if you take a look at some of the options pricing, you'll notice that 6K level that I was talking about is obviously important. The next one below there is 59.50, but this 6,200 strike seems to be quite prevalent. So definitely keep your eye out on that. And what I would also say is that we're gearing up for February, and I want to talk a little bit about seasonality. So taking a look here at the S&P 500 post-election year seasonal pattern, we're following closest to the red, so the incumbent party loses. You can see here in January, in the beginning we're pretty much range bound, and then we typically rally and then pull back and then resume trend into about the first to second week of February. And I think we're actually tracking this pretty well. You can see January, we eventually ripped up towards the end of January, pulled back towards the very end, and then we're setting up for a potential rally in the first week or so of February. So in the event that happens, I might be looking for some short opportunities, and I'll keep you guys up to date on that on Trading Analytics on our Twitter. But let's go and talk a little bit about some big tech. So, Facebook, they had some decent earnings and the stock ripped pretty well. But I want to talk about Microsoft, because Microsoft really is a tricky one. You can see it is holding some trendline support, and they did have decent earnings. You can see here, they beat on most expectations, but there are some things within the Microsoft call, and this is from Barron's. You can see that they added that the foreign exchange headwinds due to a strong U.S. dollar are expected to negatively impact revenue in the third quarter. So Microsoft's sitting back on lows, and when I thought it had just gotten out of danger, it's right back at it. So if we take out this 408 level, definitely watch out. Another one to watch out for is NVIDIA. That DeepSeek news, although I do feel as if it's overblown, it's taken a lot of beatings. And if something comes out with Trump at 2:30, where he's trying to, maybe keep China out of our AI, the U.S. becoming an AI powerhouse. If this stock takes out 115, it could get really ugly, and it could cause somewhat of a cascade effect. And maybe that February dip, that we're supposed to see starting in mid-February, early to mid-February, maybe that dip just starts right now. So lot going on, lot to stay on top of. Thanks for having me on. I'm going to go ahead and pass it back on to Blake. And please give us a follow at Trading Analytics. Thank you, everyone, and have a great weekend.
Well, thanks, Nick. And wow, what a time to be in the markets. I'm sure Nick is in the middle of filming all this, seeing all this mayhem. I haven't seen his video just yet, but I'm sure he's gone a little bit crazy as well. And as you can see, this is all as a result of what's happening around tariffs and everything else. I do want to give you my quick view on the S&P before I talk about like the three trade setups from last week and the three trade setups of this week, because obviously that's altered just a little bit. But before I do that, let me mention this. This is a lot of volatility. This is a 1-minute chart, as you see right here. This is since I've been filming this video, this week ahead filming this week ahead video. The best way to take advantage of this is actually be in the trader funding program. If you don't know how to be in the trader funding program or what it is how you can access larger amounts of capital without putting your own capital at risk. I mean, if you want to just not trade your capital, but you want to trade somebody else's like ours, then check out the trader funding program. There's a one-step assessment, which that's the one-step assessment is for any trader, especially if you're US, because if you're non-US based, so you're in Europe, Asia, Australia, somewhere else, you can actually get an immediate live trading account. Now there's rules associated with that as well, but very simple ones. But let's talk about the one-step assessment plans. So if you think you can make 10% without losing more than 6% with unlimited time, no time restraints. Now think about that. You can make 10%, but you won't lose more than 6%. And it's on a trailing basis as you continue to make money, that 6% goes up. If you think you can follow that, if you think you can trade, you should be able to do that. All right? This is the one-step assessment. There's no crazy rules. You just can't lose more than 5% in one day because that means that you really have a difficult time managing risk. That's obvious. But you know what you get inside of this? You get inside of our community. Included for a period of time, you're in the Forex Analytics community. That means you get, all this analysis. You get all of these great tools. You can be in the chat room and you can literally be around to see things like this that I just posted a few minutes ago, where I said White House Reuters report on tariffs are false, and everybody's laughing, and we're actually having conversation in this community all day long, posting charts from other people, from our analysts at Forex Analytics, and you can actually even go to the trades room. You can see what positions I'm getting in and out of. You can say, oh, Blake just sold his dollar yen, and he got out for 17 pips. And you don't have to follow what I'm doing. But if you respect me as a trader, because I've been doing this nearly 3 decades now, and you go, oh, Blake's long the dollar yen, I was thinking about shorting it. You can ask me why I'm long the dollar yen. That's where you're going to find me, literally 12 to 14 hours a day. And you can be in the general chat room, you can be in the S&P room, you can be in the news and research room and get different research reports and headlines that might be moving the market. I mean, all of this is to your benefit when you're in the trader funding program, because we're here to support you so you can keep, your profits, and by the way, you get to keep up to 90% of your profits, 75% to 90%, depending on what assessment you go with. So check out the trader funding program. It's a wonderful opportunity with this high volatility environment, so you're not putting your own money at risk. Okay, now I know I've said a lot, and this market is really moving. So we need to I'm gonna talk about a few things before we go. I do want to give you my opinions about the S&P, because last week, if you recall, when we were talking about the S&P, let me get this in there for you. We were talking about how it might have been a false breakout. You remember what we were talking about, the spiders? Remember we were talking about the spiders and saying, hey, we're right up against resistance. Well, we've basically filled the gap from earlier this week, and what you can see just over the last 30 minutes, S&Ps have come off, obviously because of these headlines. But that still sets up a very key level of resistance for the market. As you can see with the S&P, we are really struggling up around 6,100. Is it bearish yet? No. But are the bulls nervous? Look, if I was a bull and we've got all these possible trade risks around, I would be a little bit worried as well. One of the other things that we talked about last week, we talked about crude oil. Let's go take a look at crude. Crude has obviously gotten to this level of support. We talked about 73 being important, and look at how much two-way price action we've seen as we've approached 73 bucks. Now, what you'll notice here is we're actually at the 618 retracement. Okay, that is the low to the high to the 618. So you see why we're being supported. The problem is if you break much below 72 bucks, you're probably going to trade back down to 70. And, a lot of these tariffs will have stipulations regarding what's happening with crude oil, especially when you're dealing with Canada, which could have a very big influence on WTI. So keep an eye on crude. I think it's going to be important. Now, I will talk about the bond market because I'd have to talk about it in the review setup of our different trades that I gave you, the trade setups from last week and then the trade setups of this week. But I just thought about it. One of the things I failed to mention to you, and I'm going to talk about it right now, just because it slipped my mind because so much is happening as I'm trying to record this video with the markets. If you join the Trader Funding Program, if it's your very first time, you get a one-on-one session with me, 45-minute one-on-one session with me. Okay, if you're in the Trader Funding Program. I will spend 45 minutes with you explaining to you all the different tools you have available to you. I'll give you some of the tips and tricks that I've used to pass assessments. All right. And hopefully you can take some of that information and it'll help you on your journey. If you're taking another assessment, if it's more than 100,000, if it's 100,000 to $1 million accounts, you also can request a 45-minute session with me as well, because I'd want to work with you to see, and I've done it multiple times with people, hey, why did you fail your assessment? Let's figure it out so you can pass the next time around, or at least have a better chance of passing. So imagine that you get those sessions with me on reassessments, and if you're brand new to the Trader Funding Program. Okay, that I just wanted to mention. Now, let's talk about the 3 setups from last week. So here's the first setup from last week was buy the Aussie dollar on dips to 63 cents. Well, that did not work. We actually broke through 63 cents. When we broke through 63 cents, we actually have fallen quite a bit, because I thought this was a big breakout, but the breakout could not sustain because of the NVIDIA news that happened over the weekend. If you guys recall, on Sunday, Monday, DeepSeek came out and it just crushed risk. The Aussie got taken to the woodshed. So that trade, I got stopped out. It did not work. Second trade setup of last week. Long the 10-year notes while above 108. And this is why I want to talk about the bond market, about notes, not the bond market, but notes, the 10-year notes, while we're above 108. So we were here, and obviously we have rallied, and now we have an inverted head and shoulder pattern developing. So that trade worked well. One trade hasn't worked, the other trade worked well, and this is, by the way, still setting up. It looks pretty good. Now, the third trade setup from last week was short euro pound, and it's gone pretty much straight down all week. You can see this is a 4-hour chart. We basically have gone from here. We went to 84.20 and then went straight down. But unfortunately, last week I said if you can get a move to 84.40, it would be a great short. Well, it never got to 84.40. It just dropped and just continued to drop all week long. So I want to say that trade didn't really come to fruition. So we had one that worked, one that didn't, and one that didn't really come to fruition. But if you're short the euro sterling from the patterns in play in Forex Analytics, you're probably a pretty happy camper. All right, here are the 3+1 trade setups for this next week. The first one is going to be on the dollar Canadian. Now, everything that's just happened while I've been recording has everything that's taking place might have a very big effect on everything that we're doing here. But what I'm looking for, and let me delete a few things. I'm going to delete this. And I'm looking for the dollar Canadian somewhere between 140 and 147.50. Now, just if you're short or you're like, oh, there's no way it's getting to 140, the fact of the matter is, whoops, I didn't want to move that. It could possibly get back down to 140. And the reason why I say that is because if things this week happen over the weekend where there's some negotiating between Canada and Canada and the U.S., and something gets negotiated on, there's a chance that the dollar Canadian could drop all the way back down. And actually, I need to expand that out. The range I'm looking at is like this. Okay. If we have a range extension like this to the downside, we are going to be moving towards 140. Okay. And if we have that range extension to the upside, it's going to take us to 147.50. Okay, which would be the upside of that. And so I think you want to play either sides of that range. And here's the thing. If there is tariffs slapped on to Canada, come Monday, we're probably going to make a move towards 147. And I think it's going to be a decent short from up there. It's something that I've been wanting to do for a long time, but we need to get past this news. Now, the flip side is if tariffs are pushed back, and there's no major tariff announcement happening over the weekend, the dollar Canadian could drop towards 140. But I would assume that if it does drop to 140, you have to assume that tariffs are coming eventually. So you want to be a buyer as it gets towards 140. So there's trade setup number one. Trade setup number two, dollar Mexican peso. Now the dollar Mexican peso could very much rally as a result of all of this tariff news. And what I'm looking for here, and I'm gonna draw this out for you, okay? I am going to be looking for a short in the US dollar Mexican peso right around the 121.32 area, which is just shy of what you see here. Whoops. Right here at 21.50, as I want to be a seller up there. Now, I've seen a lot of banks say that the US dollar Mexican peso could be as high as 12 or 15% higher, which would be, you know, the peso could lose that much in value. I don't think so. I'm going to be looking to actually reverse the dollar Mexican peso on a move up towards those levels. And the reason why I want to do that is because I think Mexico will work closer with the US regarding immigration, China electric vehicles, drugs, and I think Mexico and the US are going to have a much easier time working with one another. So any move above, you know, towards that 21.50 level, I think is going to be a level that you want to be on the short side. All right, trade setup number three. Sorry, I'm just kind of cruising through these. Trade setup number three is going to be the Euro Swiss. I talked about this on the trade-off show with Chris Weston, and I'm going to talk to you guys through it right now. What you'll see here is a major range between these lows and that little high right up here. Now, what I'm looking for is I'm looking for a move down to 94 cents, okay, to be long, like that. Or if it breaks through 94 cents, okay, if it breaks through 94 cents, you know, obviously we're going to get some downside. But if it breaks above 95.10, I'm looking for it to move higher. Now, the reason why I would break through 95.10 is, let's just say the market does not see the tariffs as being much of a threat. When it's all said and done, yields would go higher, then we'd see a breakout. Or if it drops down to 94 cents, I'm looking for a long down there as well. And by the way, if we do break out to the upside, that means we have a big double bottom in play, which means, you know, in essence, the Euro Swiss is going a lot higher than just, you know, what you might be thinking. It could really be heading, you know, somewhere much higher over time. That's not going to happen in one day, but it's something that I think is a very major development that is happening in the Euro Swiss. All right, last but not least, here's your bonus one, the DAX. Now I'm going to have to pull this up right here. There's the German DAX, and what you're going to see is that is a 261% extension of the last known, you see it? Last known drop that we've had in the DAX. Comes up at just shy of 22,000, but look longer term, guys. This is the 2024 high to 2024 low. That's a 261% extension. So I'm actually looking for a counter trade DAX reversal at 22,000. That's going to be your bonus trade setup for this week. Guys, if you think that this video has been beneficial to you in any way, shape, or form for this next week, preparing for this next week, make sure you give me a thumbs up, comment down below if you like these videos, and subscribe to this channel. It's free to subscribe, it's free to comment, and it's free to give me a thumbs up. And that thumbs up goes pretty far. It's not just for myself, it's for the rest of the team, the editorial team that's doing this behind the scenes, social media team that's getting this out to you, and then to Nick as well. Jump down in the comments and tell him what a great job he's doing and give him a thumbs up. All right, guys and gals, my name is Blake Morrow. It's been a hell of a day, and it's been a hell of a week. And guess what? The volatility is only going to increase more. So that's why don't forget to check out the Trader Funding Program. All right, guys and gals, I'll see you on Monday on the F.A.C.E show. Have a great remainder of your weekend. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.